What's up, Dream Builder? Are you someone who's interested in creating a life by your design through all things real estate? Well, I can assure you, you are in the right place. Join me, your host, Casanova Brooks. I'm an award-winning real estate agent and investor as we uncover the top tips, strategies, and the mindset of the top real estate entrepreneurs across the world. Stay locked in because we're about to go on a journey that will change your life. What's up, Dream Builder? We are back again with another real estate episode that I'm sure is going to blow you away. We have someone on the line today that has been able to accomplish things that I was just telling you before the show that I couldn't even fathom. You have 778 doors as of a couple weeks from now, right? Yeah. But even right now at this very moment, how many doors do you have?
600.
600. Yeah. Wow. Amazing. So I want to tap into all of that. But the way that I always love to start off the show is, and first off, I guess to give the proper introduction, we have Miss Edna Keep, right? Am I saying that right?
You said it right. Yeah.
Absolutely. So we all know, and for anybody who's seen your story before, they see you as the superwoman. They see you as somebody who's been able to, and I'm sure your granddaughters and your daughters, you were just talking about that before the show, but they see you as someone who is able to jump leaps and bounds, and you're able to take on any challenge that comes your way. But a lot of the times what we don't see is behind the scenes, who is that Lois Lane? And so I always compare us as real estate entrepreneurs to superheroes. Why? Is because we're constantly putting on a cape, we're flying around the world, and we're trying to solve some of the world's biggest problems. So what I would like to ask you is, behind that superwoman, behind the cape and the S on the chest, who is that Lois Lane of Edna Keep?
Well, a little bit like your story when you were telling me, Casanova, I was actually a single mom at the age of 16. And I come from a big family. There was 8 kids. And so my family was a little let down. They felt like I shouldn't have, and of course it wasn't on purpose. It was an accident. But, I really think to this day that having those kind of things happen to you at a young age, it defines your life, right? Like it changes you. It absolutely has to. It couldn't just be about me anymore. It had to be about somebody else, and I was very lucky. I had the support of my parents. But at one point I lived in subsidized housing. And took my daughter to subsidized daycare. I was earning all of $1,200 a month. And now I tell people I can get $1,200 from one tenant. So when you think of it that way, it's a long ways. And we never set out to own this many doors. We never did. As a matter of fact, one of my very first partners, we started in 2007. He had a goal of having 300 doors. And I thought, oh, that's crazy. Who would want that many doors? Just crazy, right? But as time went on and unfolded, I found a very specific niche for myself. And I have a background as a financial advisor. And I found it easy to talk to people about money. And so my role was generally raising capital for the deals. And it became very easy to me, and lots of people it doesn't. So really put me in a nice position so I can own my share by bringing capital to the table without having to do the day-to-day management of it. And, a couple times I thought, I should just manage those myself because I'm giving away a lot, right? And then I had investors approaching me one-on-one. And so we did it a couple times. I hated it. I hated being the managing partner. So we're selling off a couple that we're managing partners of, and we're getting out of the whole management side. Because I think, like you talked earlier about what lane to be in. You need to find out what you're good at, and then just compound on that. When we started and took our training, we learned all the, multiple ways to earn money in real estate. We were actually inducted into Robert Kiyosaki's Hall of Fame because in 18 months we owned 50 doors. And we used a lot of their strategies and techniques, which is what got us into the Hall of Fame. But we decided to focus on multifamily, primarily multifamily, and primarily with other people's money.
Wow. So we're definitely going to tap into all of that. But first, I want to know, so you decided to get out of the financial advising world, and then you decide, out of everything that you could have did, why real estate?
Well, I loved being a financial advisor. I loved talking to people. I loved the socialness of it. And I used to tell people, where else can you get paid this well? And basically you're having coffee with people all day long. And of course, after a while, you have to cut the coffee out because you get pretty wired. But, it was a fun part for me. I was making about $250,000 a year, and but when I was introduced to real estate, and why I even started looking is the markets were up and down back in '07. I'd been through my second real big market correction, and it really bothered me when people were ready to retire and the market correction had happened and it was down like to 2/3 of the value or stuff like that. Like I did not stomach that well. And I mean, I could write it out. It was no big deal, but the clients couldn't always write it out. And that was the part that got me thinking outside the box. So we took a evening class to start with and a 3-day weekend class. And when we really started to understand real estate, I couldn't even sell mutual funds anymore. That's what I sold. I couldn't even sell them because it was just ludicrous. I didn't understand real estate before. A lot of people think financial advisors understand everything. I only understood mutual funds because that's what I was trained on, right? That's what I started with. That's what I was trained on. But a few of my clients had pointed out that the biggest part of their net worth came through the real estate they owned. So that's what got me to check it out. And within 18 months of starting, we owned 50 doors. I got to $5,000 a month in cash flow, and I knew then that I was selling my practice. So I sold my practice in September of 2009 and have not looked back.
Wow. Now, how do you get, because did you always start out with a partner? A lot of the times when people are first getting in, they don't know if they should do partnerships. They hear a lot about, scary situations that happen. And for you, coming from a world that you were not, or coming from a world that you had, seems like financial security in, so now you're going to something that you don't really know about. What was that like? Did you have a partnership? And if so, how did you bring yourself? Because as a financial advisor, you're kind of doing a lot of things on your own. You got your clients. You don't have to rely on other people. Can you talk about that?
Yeah, the very first 3-day weekend course we took, there was a couple there who'd been referred by another couple who took the course about 2 years before. And they owned like 20 doors already. And I still remember sitting through, at the end, they'd put you out in a different hallway and to see if you want to go on with their education. And my husband and I thought, who do we want to be like? The couple who already owned 20 doors 2 years later, or the ones that had kind of told us, oh, be careful, they're going to try to sell you something at this course, right? And we both decided we wanted to be like the couple that owned the 20 doors. So about a year later, my coach at the time, because you get allocated a coach when you're part of the Kiyosaki group, or we did at our level, we paid $27,000 US to take the education. And so we got allocated a coach. And one evening she was coming to the city and she called a bunch of her students and we all got together and had dinner. And we met them that day. And you know what? I just had this unbelievable craving to be around this couple because they were actively doing what we wanted to do. By this time, we'd bought a couple houses, and they were also managing their own deals, which, we were always kind of scared of doing. We were scared of tenants and toilets and all that kind of stuff, and they were doing it themselves. So we ended up partnering with them, our first 24-unit apartment building, which is what brought us up to 50 doors in the 18 months. And they managed, I helped raise the capital. They even raised a good portion of the capital because I was still in the financial advisory business. So I had to be careful. I couldn't invest or have any clients. So it was more friends and family and stuff like that. And we never looked back then. And after that partnership, we also got approached with another couple, a father-daughter couple, who said, Ed and I got this really great deal, but we need the capital. We've been at different trade shows and different stuff, and we're just not raising capital like we need to. And so then I partnered with them on about another 300 doors, So you know what, Casanova, it doesn't always work out perfect with partnerships. That particular one is in failure mode right now because the one, it was a father-daughter team, and the daughter's now married someone who not a good relationship with us at all. So we're trying to get out of that. So, but you know what? We wouldn't be where we are today if we hadn't started in that way. Like it just took a lot of because we didn't have to do the day-to-day management, we could go on and build and by raising the capital for those deals.
Wow. Well, we all know in real estate that first off, the deal is the most important thing. But second, you have to be able to get that deal funded.
Yeah.
Right. And so talk to me about knowing now that so many people are looking to try to raise capital and so many people are looking to get into real estate to be able to have financial security. Do you think that there's key players on every person's team? Like, who are the key players that I should have if I wanted to go and try to start raising capital for whether it's private equity or multifamily, whatever it might be? Who are the people that I need to have on my team?
That's one of the things that I teach in my course, because you know what, in real estate, especially if you go to any size, you cannot do it by yourself. Like you need all kinds of team members. Like you need your realtors to help you find your property. You need your mortgage brokers to help you fund it. You need your lawyers to help you close on it. You need your lenders. You need your private lenders. You need your, even we get a lot of seller financing. So that's part of your team. And, a really good coach to kind of walk you through your first few deals too, because that's what we had. Like we had our hands held through our first two deals because we were terrified. Like, because you always think about everything that could go wrong, right? Nobody ever thinks about I couldn't have even imagined 778 doors 13 years ago. It wasn't even in my wheelhouse. We shot for 50 and thought, oh, if that takes us 5-10 years, we didn't care. We thought that was like outrageously high. And we thought we're big goal setters compared to the rest of the people wanting 1 or 2 or 3 doors, right? But there's a lot of those people. You need inspectors, you need environmentalists, you need appraisers, you need property managers. Like there's just so many. And the nicest thing with most of these team members is you don't pay them up front. They're all there doing work for you, and they only get paid when the deal closes. That's one thing I always appreciated about salespeople. Some people get turned off by dealing with salespeople. I love dealing with salespeople. You only pay them when they make a sale. That's amazing to me. You don't get that anywhere else,
Right.
So yeah, that's those are part of the team that you need, and you have to do that very, very early on when you're starting to build.
Yeah, and it's so funny because when I think about when we first got started, there were so many mistakes that I made that I don't know if anybody would have even been able to tell me. So when you say you just got to get started, there's so many unforeseen things that come up because almost every real estate deal is so unique. It doesn't matter if it's single family, if it's multifamily, even if you're dealing with just land. There's so many variables that often come in that it's like, why did no one tell me this? For you, as you first got started in the multifamily, was there one thing that you were like, man, there's no way I would have ever known this, but this was probably one of the craziest things that happened to me, and what did you learn from it?
Oh, you know what? Like you said, we learned from every single deal. Even just recently, we're in the process of financing a deal, and we use CMHC financing a lot in Canada, which is kind of like your Freddie Mac, Fannie Mae type stuff. And they'd never, ever required an appraisal before. And now suddenly, you got to get your own appraisal. So even when you think, oh, I've done this 50 times, 100 times, there's still new things that come up in a deal that you can't, you just have to be able to roll with the punches and make it happen. We had a deal, we lost a deal one time because of the environmental. And we spent a lot of money because we put, the deposit down. We'd hired a lawyer to help us set up a GPLP. We were going to buy the strip mall. And then this environmental came up that there was perk in the ground, which is something that dry cleaners used to just throw on the ground, And we took the no, because the way that the lender explained it to us is you don't know where the environment's going to be in the next 10 years, and you might not be able to refinance it later, get your investors paid out. And shortly after that, another group came in from another province, bought it, didn't have to worry about the environmental, and they went on and did exactly what we were going to do with this, like reface it and all this kind of stuff. And, we could have had that deal. It was a huge deal for us at the time if we would have looked further into that. But they kind of blindsided us at the end. It was like, okay. Vut. And then it was like, we're done, dead in the water, because by then our time was up. And even though we had our investors raised and all this kind of stuff, everything else in place, we lost it because we didn't have a backup plan.
Wow. Yeah, no, man. And there's so many things. Like I remember hearing about a deal. There was a deal that we won't even get into that because that could be a whole rabbit hole. But all good. So one of the things that really attracted me about bringing you on the show is how much of an expert you've been in raising capital and other people's money, is how you've been able to really teach your students, teach everybody who you've come in contact with, but also grow and scale your net worth. Talk to me about raising other people's money in the sense that most people don't understand how to educate people on why they should invest in the real estate, even as a passive, a passive investor, a silent investor. You said that was one of your strong suits. How have you been able to educate investors on why they should partner up with you?
Well, I think first of all, it starts, Casanova, with a mindset shift that people want to. A lot of people think, well, oh, there's all this money out in the world and there's only poor little old me that has a deal. And you got to turn that around. It's like, hey, I got the gold here. I got the gold. And when you got the gold, people want to be part of that. And so it's a confidence shift that you can only build by really understanding what you do have. And then practicing it, because there's a lot of people out there, as you know, that would love to invest in real estate. It's safe. It's not perfect. It's pretty secure. When you're dealing with multifamily, it's one of the lowest risk investments out there if it's done properly. And when people can wrap their head around that and see that cash flow from day one, that's huge. And like you said, the education component's the huge part. That's the part that, I work with my students on, is you don't get people, first of all, by going out and saying, well, hi, I'm brand new at this and I don't have any money, but I want to use your money, you have to be working with a group of people where that confidence is already up there first time. I got the gold. And then, educating them about all the different income streams from real estate and the refinance opportunity and the forced appreciation opportunity and on and on and on. That if you don't educate people, they don't understand how it works. I had to educate people about mutual funds. That didn't. People just didn't go, oh, I read about mutual funds in the newspaper and I'm going to come and buy from you. That never happened. You had to educate them about everything. And that's when I realized I could take my background and move it over into this area and really help and share with people that. The other mistake that I see people doing is talking too higher returns. When you think about forced appreciation and mortgage pay down and cash flow and inflation and all this kind of stuff, like sometimes your numbers can look really, really high. But when you're talking to an average Joe, you cannot use those numbers because you'll scare them right away. Because, you think about it, even yourself. Like I know when somebody approaches me and says, hey, you're going to earn 25% interest on this or 25% return, it's almost automatic to think that's too high risk for me. So you have to, temper that down too and be careful how you're talking to people. And once you understand that, there's a lot of people out there that want to invest in real estate.
Wow. Yeah. So that's a key nugget right there. Don't try to, in a sense, force the appreciation on your numbers on somebody else who's maybe not been exposed to this before. Right. And that's what I think we do all the time. We get so excited and we almost just throw up on them. Right. Because we know that they at least know real estate. So they oh yeah, real estate's great. It's tried and true. It's safe. And then you start talking these big numbers, and you're like, well, mutual fund, you can only get 8%, right? And I can get you, And then people start to it seems almost too good to be true. And now you've uncovered a whole nother battle, which is that's so powerful to say. So hopefully somebody else is listening or watching this, and they say, okay, let me keep it simple, right? That's KISS, right? Keep it super simple. Right. Yeah. And just show somebody just something that is a little bit more realistic, even though where it could go. But then that gives you the opportunity to under promise and obviously over deliver to where then they become, a disciple.
And then if there's a downside, you're still okay,
For sure. What where do you see, because right now, obviously rents are being, where do you see the multifamily rental market going over the next 12 to 18 months with the pandemic all around? Like, are you guys still as excited as ever about that? Have you been looking at other trends as in turning some of your units into short-term rentals? What does that look like for you and your partners?
Well, multifamily hasn't been impacted as much by COVID as, say, retail and stuff like that because people still need a place to live. And for a long time, the people who were laid off or had their lower incomes, they were subsidized by the government, so they were able to pay their rents all the way through. I think retail is going to continue to be hit hard because I think there will be a lot more people working from home because they've started to realize that it's good. Like I've been working from home for years and years, and I love it. I absolutely love it. Can't imagine. And I used to pay big money to work in a big office, and I don't miss it at all. Love working from home. So I think more and more people will recognize that. And you can work just as hard from home too. It doesn't have to be anything different. And just as a little bit of an aside, but remember I told you we just bought 178 units in Memphis, Tennessee. Donald Trump's group just bought, I can't remember, I think it was $30 million worth of multifamily real estate in Memphis. And in the past, they were really focused on retail and hotels. So what does that tell you?
Right, that everything is moving to multifamily, and that's where people are going to have the security, at least they feel, for the next 10 to 15 years as we recover.
Yeah.
Wow. Where are the places that you look right now to invest in when you're investing in the U.S.? Because for those who don't know, you are in Saskatchewan, Canada, but you just put this under contract in the U.S. And a lot of our listeners will be in the U.S. How do you determine a market that you're looking for, and what do you look for in that market?
Well, the places that we're buying are for workforce housing, and we think there's a really big need for workforce housing. That means there's nothing fancy about it. There's no pools. There's nothing like that. It's just basic housing. And we paid like $21,600 a door. It was not being managed properly. I think a tired landlord, maybe somebody had been doing it for a long time and just got tired. And so we got ourselves a really good deal. And we'll probably put in $16,000 a door, and they'll be worth $55,000, $60,000. So just it doesn't have to be huge numbers either. And renting at $699. So when we first started talking to our investors, we're saying, yeah, we think we get $550, $600 rent. Well, we're getting $699. So that forced appreciation there is absolutely huge. And I mean, there's a ton of work to be done to renovate the units, get the units up to snuff. But again, it's basic housing, so there's nothing fancy about it. It's just making sure that everything is running smoothly, and the workforce housing and areas that really cater to that workforce too. Like Memphis has FedEx and anyway, a whole series of like lower income jobs. These people will probably never qualify for a mortgage. Like their incomes aren't high enough. So workforce housing is and there's a really big need for workforce housing as well.
Got it. Yeah. So do you try to stay in places that have big corporations like a FedEx or something like that as well? You're in the South, things like that. Yeah. Now, what does it look like in terms of management? Do you all just hire local property managers, or what does that look like? How do you manage the properties that you get, something that's as big as 178 units?
Yeah. Well, sometimes the people actually come with the deal. They've already had people in place. If they're good people, we can keep them. They have to follow the new rules. If they're not, then we just replace them. And, it's like, when you're starting out, one of the things that you have to do in any area you're going to move into is find a good property manager. So you look for the best property manager. We usually start with referrals. Maybe the realtor who we bought the deal through, it might be, hey, who do you recommend? And then, of course, then you just have to stay on top of it and get to know the people, get to understand, and of course have a system for everybody to follow so that they know the rules and everything that has to happen. Just you've got to build that power team wherever you go. And once you have it in place, you can use it. We had actually took our possession of our first 80 units in the same area in the spring. So same property management company will take over the new build.
Yeah, it's all about the relationships. And if you can
Yeah.
get people that have boots on the ground that already know the area, it helps so much. So I'm glad that
Yes.
you said that.
Yeah.
Let me ask, as you're so much wiser now, obviously, than when you first started, and just I know that everyone always asks the question if there was anything that they could change, would they? And most people say no because this is what got me here, right?
Yeah.
Like this is made me who I am. So I always like to rephrase the question and ask if there was one thing that you wish that you would have implemented sooner to accelerate your process on your journey and your dream, what would that one thing be?
Go straight into multifamily. We got cut off, I think, after we bought like 15 houses. And of course, this was 13, 14 years ago, so we could get that many. Nowadays, you're lucky if you can get four. At least that's what I'm finding with my students. And that's 4 units and below. They're considered residential. Because multifamily are financed differently. They first look at the numbers of the building because it's treated like a business. So we would move into multifamily quicker. Right now, we're trying to sell off for single families just because they're harder to manage. They're more expensive. For example, we have our own management, but like just employees. But if we were to hire an outside property manager, we'd be paying like $150 a property. And in an apartment building, you might get each door $40-50. You know what I mean? So it's a big difference when you got 18, 24 units under one roof as opposed to 15 houses spread out throughout the city. And so that's, and a lot of people think they can't. I still remember sitting down with our realtor and saying, yeah, our goal is to buy 20 more houses this year. And of course, we have to use joint venture partners because we can't qualify for any more mortgages. And he said, well, then why don't you buy a multifamily? And I said, oh, I can't. I don't own enough houses yet. Kind of the monopoly way of
Yeah,
thinking.
yeah.
And I think most people think like that. I even now when I do strategy calls with people to see if they're fit, and the first thing some people say is, oh, well, I could still buy a couple more houses, or that sort of thing. You can go straight into multifamily and bypass single family altogether. And for people who have self-employment, maybe don't have the W-2 or T4 income like people need to qualify for residential. A total different story there.
Let me ask, if somebody's listening to this right now and they're new to multifamily and they say, man, she makes a lot of sense. This is great. I want to get a multifamily and I want to try to do it in the next 12 months, let's say. But I don't know anything about multifamily. Maybe I'm a realtor. I have maybe, let's say $10,000 to $15,000 that I can invest. What is my first step? Am I just reaching out to someone who's a broker on the commercial side for multifamily? Am I going to try to invest into a software like a prop stream or something like that? What is my first step? How do I find these deals?
I think your first step is to work with a coach that has a program that can teach you that. Because there's so much to know. And it's not like, most people, the reason they go to houses because they bought their own home. So it's like, okay, rinse and repeat. I'll just buy another one, except I put a tenant in. So not a huge learning curve, right? With multifamily, there's more of a learning curve. And trying to navigate that all by yourself, for us, it was impossible. We needed a coach to take us through all the different aspects. Once you've got it down pat and you've done one or two, then it's rinse and repeat. But you need the system in place in order to do that. So that would be my first thought. And you know what? The question about the realtor, a realtor's job is to sell your property. It's not to teach you how to run the numbers. It's not to teach you that the area is a good area. So, and they have a vested interest in selling to you, but not teaching you. So you have to go in. As a matter of fact, the best realtors, you can't even get a phone call from them if you go in and you don't know anything. Like I've had students that start with me and they couldn't find any deals. Like there's no deals out there. Can't find anything. 2 weeks after they knew what to say to the realtor so that they sounded professional, they have all kinds of deals coming across their desk. So again, imagine this. You phone up a realtor and you go, hey, I'm brand new at this and I don't know anything and I want you to find me a building that cash flows. I don't know how to figure that out myself, but I want you to do all the work and then find me a building. Well, if they find a good building, guess what? They're going to keep it for themselves. You cannot approach people like that. You have to go, this is what I'm looking for. This is the market I'm looking for. I'm looking for a value add opportunity. Like there's things that you need to know to say. And say, we get a lot of vendor financing as well. And I always say, people in real estate are already predisposed to stay on as an investor, especially like retired people. Some people who are going to go on and, buy bigger and better, they'll want their money out. But there's lots of retired people out there, and they're predisposed because what are they going to do? They've never wanted to be in the stock market in the first place. They're certainly not going to do that. And if they go put it in a bank, what are they going to earn? 1 or 2%. So these investors are predisposed. But if you don't know how to talk to them, they're not going to invest with you. If you don't do things in a certain order, one of my students recently, she got a 12-unit building. It was her first building last spring. She got 85% financing through the CMHC lender. She got 13% financing from the vendor and only had to put 2% in closing costs of her own money in. And she said, because she did a webinar on it, which is one of the things that I teach them to do, educate people, right? And she said she was surprised how many people reach out to her and said, hey, I talked to that seller. They weren't even open to vendor financing. Really? But you know what?
Wow.
They didn't
Just
know
gotta
when
know
to
what to
ask,
say.
and
You
they
gotta
didn't
know
know
the
how to
lingo.
ask.
Right. No,
Yeah.
it's so powerful. I love that you said that. This has been a phenomenal conversation. Uh, I guess my last question to you is, if you, knowing what you know now, if you could leave people with one thing to get them to just take action, what would that one thing be?
Well, the biggest thing, people need to have a desire, a real desire to change their life. Like you did, Casanova. You had big reasons to change your life, right? And lots of people, you know what, they're just not willing to put in the work. So, I have calls with people and they go, yeah, I want to buy a multifamily, but they won't put a cent down for coaching. They don't have any money even for a deposit. They think everybody else is going to do all the work for them and just hand them a deal. That's something I get. People say, well, will you find me the investors? Will you find me the deal? No, I'm going to teach you how to do that yourself. You know what I mean? So
Right.
there's just way too many people out there like that. So when you're ready and it's time, the biggest thing you have to have going for yourself is a desire to change your life. Because when you have backgrounds like we do, Casanova, right? I was earning $1,200 a month, kid in subsidized daycares, subsidized housing, and I'm going, I'm not living like this the rest of my life.
Right.
People would try to tell me, Edna, you have to learn to live within your means. And I thought, you know what? If I got to learn anything, I want to learn how to be rich. I don't want to learn how to live within my means. Come on, people. But you know what?
Right.
That's a mindset. And if you're okay with learning to live within your means, have at her. But that's not the kind of students I want to work with. I want people who are going, I want to be rich.
I love it. I love it. So much energy, so much fire. This has been a phenomenal conversation. For anyone who wants to stay in touch with you, we'll make sure that we put all of the links in the show notes. But please let us know, where can they find you at?
Well, the best way, I've got a website. It's ednakeep.com. My email address is edna@ednakeep.com. And I'm on Facebook at Coach Edna Keep.
Love it. Well, again, I can't wait to hear the feedback. I'm sure you're going to get a lot of people that reach out to you because the interest is now peaked. And if anyone can think that, hey, within 18 months, if I have a coach, I can then, I think Tony Robbins says you get an opportunity to sum up decades into days. Right. And so this is an opportunity for anybody listening. If you've thought about multifamily, hire someone who's already doing it, who's still in the trenches right now, and who has this much energy to make sure that you're as successful as you can be. So this is, again, I want to be the first one, if no one else has told you today, to say thank you. And I appreciate you. And
My
just as she said,
pleasure.
DreamNation, you have to take action. And that really goes to, what is your desire? What is your why? At that moment where you just start to feel like something has to change, then you have to change first. And if you don't take action on that dream, it will only merely be a fantasy. That's all for
That's
this
right.
one. We'll catch you on the next one.
Thanks, Casanova. It was my pleasure
Thank
to be
you.
here.
If you've gotten anything out of this episode, do me a favor and head on over to iTunes if you have access and leave me a review. My whole goal is to make sure that I'm serving you all the right way. You're my tribe. You're who I care about. You're why I do this. So if you want to give me any type of thanks, or if you want to let me know whatever your thoughts or your feelings are from this episode or any other episode that you've listened to, leave me a rating or review. And also, if you're looking for more tips, strategies, and even resources when it comes to leveling up your real estate game, head on over to DreamNationAcademy.com. We have a really cool real estate section there, and it's something that I wish that I would have had when I first got started in real estate. So that's DreamNationAcademy.com. Don't wait. I'll see you on the other side.